I'm Scot Mentzer with Orchard Hill Mortgage, and this is your weekly mortgage update. So let's take a look at the recap for last week. Mortgage rates did move higher. Mortgage rates are influenced by the speculation of when the Fed will start cutting rates, how much, how long, how many times this year. Unfortunately, last week rates moved higher due to the fact that markets have given up on the belief that the Fed will cut rates in March. So what's the forecast for rates for this week? Unfortunately, rates could creep higher, and that's due to this belief that the markets have given up on the Fed cutting rates in March. So just a continuation of what happened last week with rates getting higher last week, and that will most likely continue into this week with rates continuing to creep higher. So let's talk about what's affecting rates this week. We have two things. It seems like these two things have been there for the last few weeks: economic data and the Fed. We have a few economic reports this week. Thursday brings the fourth quarter GDP report along with unemployment claims. Friday we're going to get the PCE inflation data, and this is the Fed's favorite inflation gauge, which could influence rates at the end of the week. And then more on the Fed. Markets have been pricing in a Fed rate cut in March the last few weeks, which has helped mortgage rates fall from October highs. However, markets are finally listening to the Fed members who say a March cut is unlikely, causing rates to creep up. But there's room for rates to move higher yet. So we're just going to have to pay attention here to this economic data and the Fed and just see how things go. But unfortunately, I think rates are going to creep back up. Maybe not to the October highs, but not where they were the last few weeks. Well, that's all I have for this week for the mortgage update. I'm Scot Mentzer, Orchard Hill Mortgage. Thanks for watching, and hopefully you'll tune in again next week. Hopefully it will be better news.